So the next thing you need to know, now we talked about how to compute the impairment loss. Why should we estimate or compute the impairment loss? Always should we test for the impairment. That means recoverable amount is not something which is available in our books of account. We have to put additional effort to estimate what is recoverable amount. Okay. Therefore, recoverable amount is something different from, is not available in our books of account. We have to estimate, we have to put effort to estimate it. It's not an easy thing. Therefore, we can't always test whether impairment loss has occurred. The standard tells that if there are indications that impairment loss has happened, only at that time we should do impairment testing. We call it impairment testing. Okay, impairment testing should be done. Impairment testing should be done only when impairment testing needs to be done only when impairment indicators are available. Impairment indicators what are impairment indicators? Some sort of information that shows us the carrying amount may be greater than recoverable amount. If we receive some information that shows us carrying amount may be greater than recoverable amount, and if we feel that there can be an impairment loss based on this information, we need to perform what? Impairment testing. So how can we obtain this information? The standard is very much clear on this, and standard is talking about two types of sources of information. One is external sources of information, the other one is internal sources of information. The information provided by both internal and external sources will reveal or will reflect that there may be an impairment loss. Okay, so what are the external sources? You can refer to the external and internal sources in the study text. In page number 86, there are external sources and internal sources. You can refer to these sources. So under external sources, there are observable indication that the asset value has declined during the period significantly more than would be expected as a result of passage of time or normal use. That means if externally we have some indications, for example, the market price of this of this type of asset has declined significantly. The product, in this case machinery item, the value of the products manufactured using this machinery item is not good that much. The demand for the products manufactured using this machinery is very less. If there is some sort of external market information, we can see that there can be an impairment loss. Then significant changes with adverse effect on entity have taken place during the period or will take place in the near future. In the technological market, economic or legal environment in which the entity operate, or in the market to which an asset is dedicated. For example, there can be some technological issues, those things. With that, if we feel that the asset is impaired, we need to perform impairment testing. When come to internal sources, the study text clearly tells evidence is available of obsolescence of physical damage of asset. Second one tells significant changes with an adverse effect on the entity have taken place during the period or are expected to take place in the near future in the extent to which or manner in which asset is used or expected to use. So you can refer to these internal and external sources. Please understand there should be some sort of indication, indications, and indications means what? Information. Indications caters means information. Based on the internal or external information, we are required to perform impairment testing, and if the testing reveals that there is an impairment, we have to recognize an impairment loss in our books of account as we did in the earlier example. Okay, so this is the thing you have to understand when comes to the impairment loss. In addition, actually we talked about an single asset. In addition, there is a definition in this standard, that is cash generating unit. Cash generating unit. In abbreviated form we call it CGU, cash generating unit. So this definition you have to need a small understanding about this cash generating unit concept. Cash generating unit means a collection of assets together which contribute to the generation of cash flows. In the study text, in the page number 85, the standard definition of the standard have been included. The smallest identifiable group of assets that generate cash inflows that are largely independent of the cash flows from other assets or group of assets. For example, just imagine we are having a factory. Our company has several factories. We will say factory A, factory B, factory C. Likewise, there are 3 factories. Within a factory there are various type of assets. There are building, there are machinery, there are computer equipments. Likewise, there are various type of assets. So if we just check the nature of these factories, most of these all the factories generate cash flows independently. Generate cash flows independently. Generate cash flows independently. I am referring to an example. Okay, so if these factories generate cash flows independently, we can identify this factory A as a separate cash generating unit. The standard says always we try to identify the smallest identifiable group. Sometimes if we can go to the factory and if there are divisions within the factory that generate cash flows independently of other assets, then we can tell them cash generating unit. Simply cash generating is a group of assets that generate cash flows largely independent from other assets. There can be some interrelations, but most of the time they are generating cash independently. If there are such type of group of assets, we call them cash generating unit. What is the importance of cash generating unit? Practically it's very difficult to estimate the cash flows for a particular single asset, because single asset can't generate cash flows on its own. It has to interact with other things, and as a collective effort they are generating cash flows. Therefore in some situation we have to use the cash generating unit concept for what? Impairment testing. In that type of a situation, we are taking all the asset under a cash generating unit. That means we are grouping some sort of asset under a cash generating unit and compare the carrying amount of the total cash generating unit, carrying amount of the complete cash generating unit, carrying amount of the complete cash generating unit with what? Recoverable amount. Carrying amount with the recoverable amount. Okay, so what is mean by this? We are taking all the carrying amount of the asset under this cash generating unit, and we are estimating the recoverable amount for the cash generating unit as a whole, and what we are doing, we are comparing it, and if there is a impairment loss, we are recognizing the impairment loss. Okay, at your level you just need to have this understanding, and the computation is very straightforward. You have to compare the carrying amount with the recoverable amount. But if there is a impairment loss for a CGU, cash generating unit, impairment loss for a cash generating unit, you have to distribute the impairment loss among assets based on their relative carrying amount. You just keep this in mind. Distribute the impairment loss among assets impairment loss among assets based on their relative carrying amount. Just keep in mind, this will not be tested that much. We'll talk this example for this when we at our revision phase. Okay, so we'll discuss an example for this at our revision phase. Okay, just keep these things in mind. Okay, so these are the things you need to mainly understand under LKS 36 impairment of asset. Okay, there are so many big what you call some sort of big explanation, but the essence of those explanation is you need to compare carrying amount with the recoverable amount, and if the carrying amount is high, we are recognizing an impairment loss. Okay, so there is an example in your study text, and we'll work out that example and we'll finish off this LKS 36. Okay, we'll move to the example in page number 88. This is actually a mixed example in page number 88. Okay, in this example it is mentioned there is an asset acquired at a cost of 100 million. The asset has subsequently revalued to 150 million and recognized an impairment gain. Actually, impairment gain is not the word. Here what has happened, the asset has revalued. 100 million is the cost and the asset has revalued to 115. Then a revaluation gain can be recognized as 50 million. Okay, so we are not talking about impairment gains in this impairment standard. We are always talking about what? We are always talking about impairment loss. Okay, so the thing is, we have acquired the asset. We don't know the asset account, we just take it as asset at 100 million. We are taking from rupees million figures, 100 million, and subsequently what has happened? We have revalued it. We have revalued it to 150. So the simple entry is what? Revaluation reserve account is required. Revaluation reserve. Then what happened? I am debiting my asset account by 50. The contra entry goes to the revaluation reserve, and revaluation reserve account is credited by 50. The contra entry goes to the asset account. Okay, so actually you don't confuse, this is considered this as a revaluation gain. Okay, so then they are telling the carrying value of the asset is 95 million and an impairment testing has been carried out as per the testing. Okay, it is revealed that the fair value of the asset is amounting to 35 million and value in use is amounting to 40 million. Okay, subsequently on some day the carrying value of this asset is 95 million. That means there can be some sort of depreciation, and because of the depreciation, the total 150 has come down to 95 million. Okay, so we'll record depreciation in this account as well. So I will, no, for the time being I will take the next figure. Carrying amount of this asset is 95 million. Therefore, we will take brought forward balance in the subsequent year is 95 million. That means we have depreciated the asset. They are not telling about any other revaluation loss or anything. They are telling about what? Depreciation of asset. They are telling about depreciation of asset. Okay. So the thing is 95 million of the carrying value, and in respect of this asset there is a revaluation reserve of 50. They are telling they have done a impairment testing. For the purpose of impairment testing, what they have done? If we take impairment testing, in an impairment testing we have to consider carrying amount and the recoverable amount. Okay, carrying amount and the recoverable amount, I used a short form. So carrying amount is specifically they are telling 95 million. At the same time, recoverable amount is the highest of two value. One is fair value less cost of disposal, fair value less cost of disposal. I use the abbreviated form, fair value less cost of disposal, or what other one? Value in use. Value in use. So in this scenario they are telling fair value of the asset is 35 million, and they are not silent about the cost of disposal. Therefore we can assume that cost of disposal is nil. Therefore the fair value less cost of disposal is 35 million. 35 million. At the same time, value in use of the asset is 40 million. Value in use of the asset is 40 million. Okay. Now what we are taking as the recoverable amount? The highest value between these two. Highest value is 40 million. Therefore, in this scenario, my recoverable amount is what? 40 million. My recoverable amount is 40 million. Okay. Now I am comparing the carrying amount of 95 million with the recoverable amount of 40 million. 95 minus 40. 95 minus 40. Then there is an impairment loss. Impairment loss of how much? Impairment loss of how much? 95 minus 40, 55 million. Impairment loss of 55 million can be identified. Impairment loss of 55 million can be identified. Okay. Always impairment loss equal carrying amount minus recoverable amount. So there is a 55 million of impairment loss. I taught you the double entry as impairment loss account debit, provision for impairment loss account is credit. But in this scenario, in respect of this impaired asset, there is a revaluation gain. Earlier we have revalued this asset and there is a revaluation gain of 50. Therefore, to absorb this impairment loss, we are having a 50 reserve of 50 million. First I am utilizing this 50 million reserve, and then only I am recognizing the impairment loss. Okay. So the double entry would be revaluation account. Revaluation debit 50. Debit 50. That means I am utilizing this reserve to absorb that impairment loss. But total impairment is 55, my reserve is 50. Therefore, using this reserve, I can absorb only 55 of the impairment loss. The remaining 5 have to be charged to profit or loss as an expense. Therefore, the remaining part, impairment loss, account called impairment loss is debited by 5, and the total credit entry would be provision for impairment, credited by 55. Provision for impairment is credited by 55. So when you are preparing financial statement, in the statement of financial position, you are showing this asset value as how much? In the account there is a value of 95. In addition, this impairment provision is 55. Therefore, in the statement of financial position, you are showing this asset as 40. On the other hand, in the income statement, I am taking here income statement. In this scenario, related to this scenario, you are showing an expense called impairment loss. For this scenario only 5 million is available. For this scenario 5 million we are recognizing as an expense under the income statement. We are recognizing 5 million as an expense under the income statement. Okay. So this is all about what you need to learn about impairment of asset. We will just talk about how this has been tested in your examination in our revision phase. For the time being, I think for you have to for you to start your studying purpose, this is purely sufficient. Now you know what is impairment and how to perform impairment testing. Okay. So this is the thing we need to discuss under impairment. Okay. So I guess you are clear on this impairment part, and actually this is not a big thing. Practically this is a very complex scenario, but in examination purpose this is a very clear and straightforward computation, since you are given with all the relevant figures. Okay. So with that we are completing this impairment part with all the important points, and there are definitions and those things. You can refer to those things and go through those things, but I have covered all the important parts. There are so many descriptive form, but I have summarized all the things in the whiteboard that is useful for your examination. Okay. So now we are moving to another standard after this standard. Okay. So hope you are clear on this standard.